At the end of April, BRI Ferrier lodged an article on its website in relation to arrangements reached with the Australian Taxation Office where basically you do a deal where you'll repay an outstanding debt over a period of time. Now, the relevance of that is how that interacts with the insolvent trading legislation. I'm John Carrello, I'm the principal of BRI Ferrier WA, and today we're just going to expand a little bit on that and go back and highlight an area in the article which I think is far more significant than maybe we first suggested. An entity is insolvent, I'll start that again. The way the legislation works is they talk about solvency. So a person is solvent if and only if the person is able to pay all the person's debts as and when they become due and payable. Accordingly, the following subsection in those acts says a person who is not solvent is insolvent. Sounds very simple. I can tell you now there's many cases about what that actually means in the real world. The key elements being due and payable, and what that means. Is it a debt, for example? They've all been questions asked at various points in time in law. So let's bring us back to the ATO scenario. As liquidators, the first thing we look at is the ATO debt. That's generally the first sign of financial difficulty, simply because people don't pay the ATO. Subsequently, they might get on the blower and do a deal with the ATO where there are regular monthly payments. Now, outwardly you would say, well, I've deferred the debt to the ATO because of that. In reality, you possibly haven't. So there are two sections in the Australian Taxation Act that are relevant. The first one is section 255.15. Now, that's probably the section that doesn't help you because, simply put, that says even if you have a payment arrangement in place, it is not a deferment of the debt. The debt itself is completely due and payable. So what that means is that whilst you're doing your payment arrangement, you are still insolvent. Now, obviously, it's not the only factor we look at, but it's important to note that you may get a false sense of security out of that arrangement. There is another section which I have to admit, in all the years I've done this, I've never seen anyone rely on it as a defence. That section is 255.10. That provides that the Commissioner, being a reference to the Commissioner of Taxation, having regard to the circumstances of your particular case, defer the time at which the amount of tax-related liability is or would become due and payable by you, whether or not the liability has already arisen. If the Commissioner does so, the time is varied accordingly. What that means is you have restructured your debt that is due to the ATO. So for those of you that are seeking to reach arrangements with the Australian Taxation Office, you should be specific about requesting that that arrangement be made under that section. It has to be made in writing, and there are obviously going to be some hoops you're going to have to go through, but that's got to be your first starting point. Now, having said all of that, the reality is there's probably close to 10 to 15 items that identify a company that's insolvent. So as much as I've given you a sound starting point, I'll have to add something else. If it's broken, you need to fix it. That may not necessarily be anything more than a band-aid on a bigger headache. So I would urge you to take a view that as soon as you reach a point where you can't pay the ATO, it's highly likely you can't pay some of your other creditors. So stop, take a big breath, do some planning, take some advice, and move forward in a very positive and structured manner to ensure that you pay all of your debts. Thanks for your time today, and if there's anything we can do to help, please contact us.